What's going on, everybody? You already know what it is. It's your boy Brill, aka Vino, aka Mr. I gets better with time. You know what I'm saying? We're just doing another market update because I ain't placed no trades today. Like I could have, but I didn't trade today on Nasdaq. But I wanted to show this what happened on Nasdaq today because yesterday, if you watched my previous video, I was explaining after I was explaining the trade that we caught 1200 that we made $1,291 on over here to London highs. I was explaining to you guys like it was a clip. I might just put it. I might just put it in this clip. Maybe hit this fair value gap and then just dropped all to these lows and then these lows. Like you know what I'm saying? These lows were what? This is Asian low from from Thursday, and this is London lows from 5 a.m. from Friday. So these lows can get ran. Like all of this could be just a run up here, just to run these lows eventually. Like these lows might and eventually get ran because these are high liquidity levels. Like before you see this, I was like, these lows were from last week. Last week, London low from 5 a.m. and then Asian low at 8 p.m. on Thursday, right? And I was explaining to you guys that this happens every day. Like, you know what I'm saying? If you see, because yesterday we seen Asian lows get ran, then we seen London lows get ran, and then we were expecting for the market to sweep here and then give us a signal that it's going to run and take out London highs and Asian highs. So when I was explaining to you guys, yo, the market has to buy in order to sell, and then the market has to sell in order to buy. So this is a perfect example of that theory of what I'm explaining. Like because after the Asian highs and the London highs got ran through, where are we looking to target? Like, you know what I'm saying? After after all of that happened, I got all of this markups. Like I just leave it on so when I go back on the charts, I don't know, I just like to keep it on. Like, you know what I'm saying? I know it might be messing with your eyes and stuff, but I apologize. I'm gonna hide it. Hold on, let me see. I'm gonna hide it for you guys. So like, boom, we seen the market basically, as you know, this is Asian highs and these were London highs, and we were down here, uh, Asian lows, Asian session, and then we had London lows, London session. So when the market ran these lows, we were looking for a sweep of liquidity because it grabbed liquidity here, then it grabbed liquidity here, and then during New York at 8:15, 9 a.m. See, like, look, 9:30, market open, it starts moving bullish. Now it's moving bullish. We're targeting these highs. We're targeting the highs that were left from the last session, whatever. You know what I'm saying? So in this area, right, we've seen the market buy up, all of this momentum going bullish, right? And it came back into previous structure. I guess you can consider this a order block area, but this is also a fair value gap area right here because it was just like the first fair value gap that was created after this after it broke structure, like broke market structure. Like I'm gonna have to mark it up. I'm gonna have to mark it up. Like I'm gonna have to mark it up. But like right here where I'm drawing this line at, that was a market structure shift. Right here, where like let me zoom in. Right here was the market structure shift. So we know market structure is shifting. We have a fair value gap here, and it's getting traded through, getting expanded through, and then we have the market structure shift, and then we have a change in structured delivery. So the change in structured delivery usually happens simultaneously as the market structure shift. So when you have both of these things happening, you have the market structure shift, the change in structure delivery. Change in structure delivery is different from the market structure shift because the market structure shift happens when a low is being ran. Like a low like this wick. Hold on, let me change my I want you guys to see it as clear as day. Like you see, oh, see that shit not working. Like you see right here, right in this line, this right here, when the market breaks past this level and it closes below that level, that's considered a market structure shift. Now, a change in structure delivery is when there's a series of up close or down close candles where a candle expands through that low. I should just change color. What the fuck? But it expands through this low right here. See this low, the low of price, not the wick. The wick is going to be market structure shift, but change in structure delivery is the when price closes below that price right here, because that's what started the move. You know what I'm saying? So these two things lined up with the break, basically the fair value gap being inversed. Can I draw my shit? What the fuck is going on? Like shit tripping. I'm like, what the fuck going on? All right. So like, back to what I was saying, the market structure shift and the CISD combined with the fair value gap being traded through, right? Turns it into a inverse fair value gap. And you see how the market respects it. Like we have a fair value gap here. This shit. We have a fair value gap here, and then we have another inverse right there. So the market trades up, trades through, creates a fair value gap, and then trades through this previous bullish fair value gap, turning it into an inverse fair value gap. So we have three confirmations of price, like no indicators. I'm not even talking about my indicators yet. Like I'm not talking about those signals or the indicators yet. I'm just talking about straight price. Fair value gap getting traded through, market structure shift, and then we have change in structure delivery. And the market trades through and then tests around the fair value gap and tests back on the previous inverse fair value gap that's basically on the lower time frame. Like this fair value gap is on a lower time frame. Like up to 5 minutes so you can see it. See, as you can see, like right here, see this fair value gap was on a low time frame, 5 minute, and we were just on the 15 minute. But you can see that price is fractal. It happens on every time frame. So as long as you can understand what you're doing, what you're seeing, you're valid. So just same example as when we made that buy yesterday, and it swept London lows and Asian lows to go bullish and run Asian highs and London highs. When there's a sweep of liquidity, it adds more confluence to it. Like this high right here, I think this was still Asian with 12:35. I think that's still Asian session, right? Swept those highs, swept these highs. Like there's two highs during Asian. It swept its highs and then expanded down, created a fair value gap and inversed the previous bullish fair value gap and turned it into an inverse fair value gap. And you see the market traded through, tested up into it, played around at the median. Like most of the time, it's gonna like mainly tap like the middle part of the fair value gap, and then we seen an expansion low, and this expansion low, basically like confirming like yo, that this expansion is breaking through the previous fair value gap that we were talking about, the 15 minute one. So we seen a 5 minute fair value gap get traded through, and then we seen a 15 minute. Hold on, where I'm at. and then we seen the 15-minute fair value gap get traded through. So price is fractal, so it's happening on a lower time frame, and then it's gonna happen on the higher time frames, and it's gonna continue to. It's like you know what I'm saying. It's gonna trickle down, like you know what I'm saying. It trickled down because it starts on a lower time frame. You get in early, and then on a higher time frame, it starts to show like because the lower time frames are creating the higher time frame candles. If you get what I'm saying, like because each candle on this chart is 15 minutes, so it takes 15 minutes for each candle to close. So the 5 minute at five three 5 minute candles is one 15-minute candle. You know what I'm saying? Like if you see, you know what I'm saying. So the market traded in there, traded in that fair value gap, and this was an entry opportunity. You could have took this entry, had your stops above these highs because the highs were already swept, and you would have felt safe because you have first of all you got two inverse fair value gaps that were inversed and invalidated to go bullish, and they go bearish. They got traded through, and now your entry stops above the highs. You take your trade down into recent lows, which is here. And why would you take it there? Because like that's internal range liquidity. Like that's where the market wants to go. The market wants to go towards the liquidity. You know what I'm saying? The market wants to go towards the liquidity. And this is also area where the fair value gap was lying around. So those you can use the fair value gap as targets as well as entry opportunities. You know what I'm saying? Like it's all everything all aligns. So now getting back to what we were talking about with the previous trade. So when the market traded through and it created another fair value gap here, what you would do is just draw it out, right? You would just draw it out, and then as prices continue, you're not out your trade yet. You're still in your trade. Maybe by the time maybe you would have closed out like right here or some shit. Like you know what I'm saying. You probably wouldn't even have held that long. But mainly your target should be internal range liquidity. So internal range liquidity got ran, and then now we are back where we were talking about yesterday. We got the 945 candle low, Asian low got set in. Market traded up, created a London high. Asian high was created, and then we got another Asian low, and then we got London high, and then we got London low. You know what I'm saying? You see, we were expecting this low to get ran, and then for them to grab liquidity, and then we're expecting these highs to get ran. These highs, like I was out this trade with $1,291 here, right? But it was an opportunity if I would have stayed in the charts, let's say like for the rest of the day, like 2:30, because 2:30 around 2:30 to 3 o'clock is another good area for you to start trading again on Nasdaq. After that, you're done for the rest of the day. If you don't, if you see opportunities during that time, you can. But the best time to trade is during New York session on futures when they come down to futures. Um, so we seen the market trade into the fair value gap and it didn't get inversed. You know what I'm saying? So this is what I'm saying. This is the difference between what happens when a fair value gap gets inversed or a fair value gap gets respected. So the market went bullish here and like we could have considered it being a break of it, but we have to consider that we have this order block here. And what makes this an order block because it's the last bullish candle before like it got traded away with speed. Like it just got traded away and the market just left it. Like that was the last one. It just left it there and it just continued its bearish descent, right? So the market came back into this area. Market order block. The market came into this area while running above the fair value gap. Now, sometimes when you have two PD arrays or two PD arrays or two, I don't know what you. I'm trying to say it in a word in my own terms, like so you like when you got an order block and a fair value gap in a prime area at the same time, like sometimes if it trades through the fair value gap, it's actually trading towards the higher PD array because it could have stopped here and it did find resistance here, but they wanted to tap the order block because there were still orders at this level. There was orders that they were mitigating at this level. So as soon as it tapped this level, the market just rejected, right? We seen a reject, and then we seen the market create a change in structure delivery after it expanded through these series of down close candles, of up close candles. So we know we're in a downtrend, we're in a downtrend right now. We're in a bearish market. We seen the market structure shift, market drop, we're in, and then the market drop here, we're in a bearish market. Like in reality, we're in a bearish market because we've seen this happen. We've seen the market structure shift happen. So market structure shift means this change in structure from buyers to sellers, from sellers to buyers. You know what I'm saying? So if you were the best way to like have your best trades is like you draw your fibs out, and anything below 50% would be considered premium, right? Everything, so you wouldn't be wanting to sell down here. Like, you know what I'm saying? That's why it was good for us to buy down here. You wouldn't be wanting to sell down here, but when it gets into premium, I mean, when it gets into discount, I think I'm saying it wrong. I think this is discount and this is premium or whatever. You know what I'm saying? Yeah, you want to buy in premium and sell in discount. So yeah, so this was premium, and when it got above 50%, it was in discount. And all of these things aligning the fact that you got OTE, optimal trade entry 62%, 50% equilibrium, and then 70.5 is like that's like the last area. Like you see price find resistance there, like or support there, you can, and then you see like a rejection and you see like the price showing you this, like you can have and great you can have you'll have more conviction with to go with your sells or to go wherever trade that you're taking at that time. So it lined up with the order block and the fair value gap in this area. So this whole area right here was a prime area, a high probability area for you to take a trade on, for you to look for sells. But why is it more valid for us to look for sells here? Like at any but other why is it valid for us to look for sells at this point versus like at another point or like at a random area? Because we seen the Asian highs and Asian lows get ran. So at this point, liquidity is grabbed. Like, you know what I'm saying? They already grabbed liquidity. They grabbed liquidity for both sessions from yesterday. So where is the next level of liquidity that we're looking at? Like where can they grab? They already swept liquidity up here, so we're not really thinking they're gonna go up here. They could, but why would they? Like they were just there yesterday. You know what I'm saying? Like they were just there. Like we just grabbed liquidity, we swept that, we sold off. Now we're targeting the lows that were created last week. Friday, London session. Thursday, Asian session. So like they grabbed the liquidity order block area, then we seen the market trade through, and then we seen our first fair value gap basically trading through these lows. Like right here, market structure shift. Seeing that we got the change of structure delivery here. Mark it off for you guys. Change in structure delivery here. Then we have the market structure shift here. And then we have the expansion candle. Like this is like a small fair value gap, but like I don't like the small ones. I like the more significant ones, the ones that you can visually see. Market traded through those lows. And mind you, we're on a 15-minute, right? So market traded through those lows and created a fair value gap. Let's zoom in. Let's zoom into this area. This fair value gap is right here. The reason why it's a fair value gap is because it was just a bearish candle. There was no trading done on this side of this candle. So that leaves the market inefficient. There's inefficiency in the market, right? So technically, like the market is going bullish right now. It could come back down to this area because we also have a breaker block here. Then we have a inefficient area, market structure shift. Like we had this area is a primary to look for sells, and like when I draw fibs out on it, if it lines up with our discounted area, I mean yeah, discounted area. Oh, it actually doesn't line up with it. But anything above 50% at the end of the day is still discount. Regardless of anything, it's still discount. So it could come up here, but it won't. But if it does, it's still a good trade. Like regardless, it's still going to be a great trade no matter what. Like because it's in discount. You always want to sell in discount and buy in premium. So when the market trade line, let's go down to the 5 minute so we can see if there was rejections or opportunity for us to get in on that. So I'm going to mark that off. See its fair value gap. See, it's a regular fair value gap because it wasn't traded. It wasn't traded through to the buy side, so it was not inverse. So we have this. We have the breaker block. We have the breaker block, and then we have the fair value gap, and then we have this change in structure delivery. Then we have this. So all of these things are telling us, oh, market is showing intent to go bearish. I'm gonna have to like just mark it off. I'm gonna mark up the breaker block. So I'm gonna change the color. I fuck it, red lines. All right, so you see this whole area is a breaker block, and see the market basically. This is the fair value gap, but it's on a lower time frame, so it looks different. On a 5 minute, remember I was saying price fractal, so it's gonna look different. On the 15 minute, it's a full fair value gap. On the 5 minute, we get more zoomed in. We can get more precise on our entry. Like you see the fair value gap right here. So in reality, it traded into the breaker block and it tapped into the fair value gap. And if you want to get more precise, to get a real precise entry, look. As soon as it taps into the fair value gap, yeah, I got mad shit on my chart, so I'm trying to keep in mind where the breaker block is. The breaker block is here, right? I'm about to just remove it real quick. This is your entry opportunity, right? As soon as it taps into here, you sell. I know it's gonna look scary, but as soon as you tap into it, you sell it because this is a inefficient. The market is trying to make the market is inefficient and it's trying to make the market efficient, so it taps into the inefficiency and then sells off and then continues to drop while also tapping into the breaker block. As you can see. So man, see how the market traded into the fair value gap and into the breaker block? Confluence with price. Confluence with price. This is reading price. We're reading price, order flow, how the markets move. So after you would have got in on this trade, let's say you'd have got in on this time frame, got in right there. Stops would have been I won't put my stops right here. Like my stops would have been right here. Like, because if I'm wrong, I need to know I'm wrong as soon as possible. Like I don't need to be. I'm not losing. I'm not into losing mad bread. Like I'm into having tight stops and making a lot of money. That's what I'm into. Like you know what I'm saying. So knowing that after we enter there, we're targeting these lows. Like that's the only target we have. First target is these lows that were created during New York session, right here at 8 a.m. Those are our first targets. So that's TP1. That's liquidity. There's liquidity down there. They're going to target the liquidity. So that's TP1. TP2 is what was this? London lows. TP2 would have been London lows, right? You're trading from liquidity to liquidity. You know what I'm saying? You're trading from liquidity to liquidity. Liquidity to liquidity. So I would have felt safe having my stops above this fair value gap and having my stops above the breaker block that we had marked off. Like either one would have been fine. You know what I'm saying? Either one would have been fine. Either area would have been fine. Your stops would have been good. You just would have answered, and you would have just automatically just been in profit. You know what I'm saying? But your targets would have been based off where liquidity lies. And knowing that the Asian highs and the London highs were ran, and then we're overall in a bearish market, we're in deep discount. You know what I'm saying? And the market creating fair value gaps. You like just all of these things in your mind will give you the conviction to know, like, okay, let's hold this trade. Now that we're in our trade, we're gonna hold our trade towards London lows because we expect these lows to get ran. First of all, like first off rip, we already expect New York lows to get ran. Off rip, we already expect New York lows to get ran. And then after that, we're expecting London lows, and then we're expecting Asian lows. And as you can see, like, look, the market literally shows you, like, I'm gonna draw this out. I'm gonna drag it out. Like, look how it swept here. As soon as it ran each low, as soon as it got to the last low from last week, from Thursday, it doesn't even trade that much lower into it. It literally just sweeps it and grabs liquidity and then inverses. And this was a trade opportunity right here. Like I'm saying, like inversed it, inverse fair value gap. You enter on the close, and it's a market structure shift. I mean, not market structure shift. Change in structure delivery. So all of these things like are giving you entry opportunities. Like this is entry opportunity right here, and then you would have just been in it, and then you would just ran these highs, targeting these highs. What's this? See, London high. See what I'm saying? Like simple shit. Like I listen. London high, 3 a.m. They ran Asian lows from Thursday. Automatic. You seen the fair value gap get traded through. You enter. Same trade as yesterday. Same thing I was just telling you guys. It happens every day. Like it literally happens every day. Came in this morning. I'm not trading, bro. Like I wasn't trading. But you could clearly see like you have an opportunity to do the same thing. Like the same thing you did yesterday, the same thing happened today. They ran Asian lows. Fair value gap gets inversed. We enter on the inverse, but this is the 5 minutes. So when I entered yesterday, it was on 30 seconds. So let's go down to the 30 second to see if you would have got an even better entry up here off of this. Like, let's say if you would have entered here. Boom. See? Simple. This is the 5 minute. Now we're on a 30-second time frame. We're on a 30-second chart. Let's go down to right here. We're on a 30-second chart. You see this fair value gap right here? Look at it. Gets traded through inverses. So now it becomes a inverse fair value gap. Then we got the market structure, change in structure delivery, series of down close candles after the sweep, series of down close series of down close candles get traded through. My shit doing that shit again? My shit doing that shit again. Why does this keep happening? I need to figure this out. Okay, all right, we're back. So series of down close candles get traded through after a sweep of liquidity. Like liquidity is already swept because we're at Asian lows. But another sweep of liquidity and then an expansion through the previous down close candles that creates this change of structure delivery. And then we have the market structure shift here at the high when the market expands through. So we have those two things, market structure shift and a change of structure delivery and a fair value gap getting traded through, becoming a inverse fair value gap. And as you can see, like low, you could have entered on the retest back into the inverse fair value gap, or you could have just entered right here and then enter as soon as it expanded through, and your stops would have been below these lows. Like let's say you entered here, you could have entered it there, but let's say you entered it here. And you'd have been targeting Asian highs. Your stops could have went below the fair value gap. That's where I would have put my shit. I'm just being real. Like they would say it would be safer to put it right below the lows because you know damn sure it's not gonna go all the way down there again. Like it's I mean it could, but like you're not expecting that to happen. So that's why I put my shit tight because I'm like I'm not expecting it to just trade through that shit. Like after I see that expansion through and then I see all of these tested candles testing it on the 30-second time frame, I'm good. Like I'm just gonna just put my stops right there. Like if I'm wrong, I'm not losing a lot of bread. If I'm right, I'm making the bag. Like that's just it. Nigga, like if you're wrong, you lose a little bit of money. If you're right, you make a bag. That's it, nigga. We not there's nothing else. There's no other way around it. So clearly, we targeting Asian highs after Asian lows get swept. We seen the lower time frame give us signals to get in. We seen the change of structure delivery. We seen the market structure shift. We seen the expansion. Then we see like this is also a fair value gap as well. This is also a fair value gap as well. So we have the inverse fair value gap. We have the change of structure delivery. We have the market structure shift. Then we have a fair value gap. The market trades into it. You enter. Market goes straight into profit. And you're not closing until London highs get ran. And as you can see, you would have been in profit. It would have been consolidating, 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 and then boom, as soon as it hit 12:10, 12 p.m., take profit would have been hit and you would have been done. You would have been done for the fucking day. Like that's it. You'd have made $5,000. You'd have made $20,000. You would have made somebody's fucking salary in fucking 2 hours, and you would have just been done for the day. Like you know what I'm saying? You gotta be fully focused on this shit, bro. You gotta be fully focused, bro. Like this shit is real. Like I just sat here and I just broke it down to you, both ends, both sides. Like I'm telling you, this is how we do this shit. You want to be fully focused? You get on the chart, you trade liquidity, 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 man. Like, but yeah, man. Like, so shit. That was today's trade, and that was today. So you see how like you zoom in. This is 5 minute now. Zoom in on 30 seconds. You'd have entry. You'd have been here. This is sniper fucking entry. You show it to somebody, be like, "How'd you get that entry? How'd you do that?" How I did that because I'm on the lower time frame, gang. I'm on the lower time frame, getting busy, bro. Like I'm waiting for a market structure shift. I'm waiting for a fair value gap to get inverse. I'm waiting for liquidity to get swept, and I'm getting in. That's it, bro. Like that's it, point blank. So yeah, man. Like I just felt like I had to make this video to just add on to what I did yesterday, because yesterday trade was fire. And I remember there was a clip in one of the videos that I said I was like, this is bearish. Like I was on H4, I was like, I said like this is painting bearish. And it was like this. This wasn't even here yet. All these candles here wasn't even there yet. I was like, this is painting bearish. So we caught a bullish move, but this is painting bearish. Right? It was right here. And I was like, this is painting bearish. Like, we caught this here. Boom, boom, boom. And made the 1231. But I was like, it's painting bearish. And look, exactly what happens. Like, see, these lows get ran. 2 a.m., London, Asian. You know what I'm saying? And we're inside a fair value gap right now. So, depending on what happens here, it might go bullish again. But you know what I'm saying? I'm just listen. I'm just breaking it down. I'm trying to. I don't know if I don't know if I'm making it sound simple right now. I'm trying to make it as sound as simple as possible. Like I know you may not know some of the terminologies that I'm explaining, so of course I'm gonna have to make a video explaining terminologies. Like this is nothing new. Like you can go on YouTube and type this shit up. Like I'm just being real. This shit do not come from me. It come from Michael J. Huddleston, Mr. ICT himself. This guy has been teaching thousands and thousands and thousands of students across the world how to trade like this. And I just recently figured it out. Like I didn't well, I'm not saying I figured it all out, but I'm recently seeing success with it and I just want to share it. I want to share it with you guys. I want you guys to see the same type of success. I want you guys to win trades too. I want you guys to be fully focused on being a better version of you. You know what I'm saying? Being the best version of you. That's it. Like, you know what I'm saying? So that's today's video, man. You already know who it is, man. It's your boy Vino. It's your boy Brill. I'm out of here. Stay safe. Keep trading. Stay fully focused. I love you.